everyone, Matt Clark, research analyst for Money and Markets here with your marijuana market update. Now, before I start, after you watch this video, I want to make sure you head over to moneyandmarkets.com and sign up for our free daily e-letter. From Sunday to Saturday, you'll get a free e-letter that contains safe and profitable investment information from myself, Green Zone Fortune's co-editor Charles Sizemore, and our chief investment strategist Adam O'Dell. So make sure you go to moneyandmarkets.com, sign up to get safe and profitable investment information every day for free. Now, last week, I asked for your feedback on how your cannabis investments were doing so far, and the responses I received were fantastic. I got them through YouTube. I got them through email. I want those to keep coming. Let me know how you're doing. Just email me at feedback@moneymarkets.com or make a comment down below on our YouTube channel and let me know how your cannabis investments are paying off for you. Now, today I'm going to address a question from Melanie. She emailed me at feedback@moneymarkets.com. She said, "Love your platform. Straightforward information with no BS." I love that. I'm not a big BS guy. Give it to you straightforward. That's about the long and short. Excellent job and keep up the great work. Would you mind looking into Medipharm Labs for us? It used to be a hot stock, but seems to have fallen off the radar lately. Thank you, Melanie. Well, thank you, Melanie, for your email and for your kind comments. I do appreciate that. Now, about Medipharm Labs Corporation, it trades over the counter under the ticker MEDIF. It also trades on the Toronto Stock Exchange, so make sure you know the difference between the two. Over the counter, it's MEDIF. It's a Canadian-based company. It produces and sells pharmaceutical-grade cannabis oils and concentrates for derivative products in both Canada and Australia. It also provides contact processing services to licensed cannabis producers and growers in Canada. So basically, it produces its own oil, but it also helps other growers process their product as well in Canada. And Melanie's right. The company has pretty much fallen off the radar after reaching highs in late 2019. One of those reasons is likely because it's had a pretty drastic revenue drop-off. As you can see from this chart I'm showing you here, the company had a 72% drop-off in total revenue from 2019 to 2020. Its gross profit dropped from $32.3 million in 2019 to negative $5.5 million in the trailing 12 months ending September 30th of 2020. Medipharm's revenue went from $13.9 million in Q2 of 2020 to just $4.9 million in Q3. The third quarter also came with two very sizable write-downs for the company. It wrote down $6.3 million in non-cash due to its inventory, and another $1.5 million write-down of non-current deposits given to vendors for capital expenses. Now, its quarterly net losses were reported at $15.4 million before tax, compared to a net loss of $3.8 million in Q2. Basically, it's all spelled a very, very rough year for this company. The company was forced to cut employees to save $3 million. It also transitioned out of the B2B, or business-to-business, wholesale concentrate market to more white-label contract manufacturing. As a result, company CEO Pat McCutcheon stepped down from his role in December of 2020. He's still the chairman of the board, but stepped down as CEO. And their chief financial officer fell to an interim earlier that month. In January of 2021, just last month, Greg Hunter was named the CFO of the company, and Keith Strahan remained as the interim CEO as the search for a permanent CEO remains ongoing. Of course, as you know, if companies have struggles with leadership, that can transcend to stock prices. The market and investors don't like unsteadiness with companies. And when you have leadership issues, that is the very epitome of being unsteady. These were all done due to sales and due to financials, things like that. So there's a reason why, but until those roles are filled, it's going to take some time for investors to gain confidence in companies like Medipharm. Now, Medipharm's stock price hit a high of $5.40 in August of 2019. It's pretty sizable. That's a pretty sizable gain there. In the last 12 months, that high was $2.38. So its 52-week high was $2.38. They hit that back in February of 2020. However, now the stock is at 57 cents a share. That's a 76% drop from its February 52-week high. It's an 89% drop from its all-time high set back in 2019. And to put that into some context for you, the agriculture industry, which Medipharm is part of, their stocks have risen 60% in the last 12 months. Medipharm has actually dropped 76%. So that's a huge difference between agriculture stocks, which have been moving upwards, and Medipharm, which has been increasingly declining. The picture for Medipharm is even bleaker when you compare it to the S&P Canada Pharmaceuticals, Biotechnology, and Life Sciences Index. This is just an index that basically lumps all those stocks together and generates an index, but Medipharm is part of it. And now it compares Medipharm's performance on the Toronto Stock Exchange, but its OTC performance is fairly relevant, fairly close. The index has grown 21.8% in the last 12 months. Medipharm's Toronto stock price has dropped 74%. Huge difference. Now, while revenue projections for Medipharm are expected to get back to 2019 levels, it's going to be another year or so before that actually happens. In fact, I would say it's going to be even longer than that. Basically, the company had to reinvent itself to right its financial ship, and it's going to take time before we see that reinvention actually become worth it. The stock would be a hard one for me to recommend, if for no other reason, because it's hard to see where this dip is going to end. Even as I checked the stock price right before I started recording this, the stock price was actually dropping more. So it's hard to, even if you were a buy the dip kind of a person, it's hard to really see where that dip is going to be. For us, we like to see stocks that are in a confirmed uptrend, and Medipharm just isn't there. We want to see stocks that are moving upwards. You know, buy high, sell higher. If the momentum shows it's going to jump, then you can almost bet the farm that it's going to keep going up and you're going to see gains. Whereas if you try to buy the dip, you've got to really try to calculate where that dip is. And with Medipharm, it's really hard to say where that dip is going to lie. Now, I want to talk about the performance of our cannabis watch list on money markets. I talked about it a little bit last week in a special video I sent to you. We actually found our first triple-digit winner on the cannabis watch list. A huge growth in very, very short amount of time. Now, before I get into that watch list, I do want to hear how your cannabis holdings are doing. Did you follow recommendations from the watch list? And if so, how are those doing? I've heard from a few of you so far who've had some very impressive gains, and I mean impressive, especially on a cost basis level. And I'm going to talk about those in a future video. You can email me at feedback@moneymarkets.com. Tell me how your cannabis portfolio looks and what stocks you'd like me to examine for future updates. Now, I'm going to start with looking at Grow Generation Corporation. Trades on the stock exchange under GRWG. The specialty hydroponic and organic garden center has been on a bit of an acquisition spree of late. Most recently, the company announced that it was acquiring Grow Warehouse, a 4-store chain of hydroponic and organic garden stores in Colorado and Oklahoma. This acquisition came just weeks after the company bought 2-store chain Grow Depot, which is based in Maine. Now, Grow Generation expansion is relatively small. These aren't huge. The dollar figures aren't really there, but I can't imagine that they are billion-dollar acquisitions. But they are aggressive, and they do expand the company's footprint in all 3 states they're into now: Colorado, Oklahoma, and Maine, and that's good. And as of right now, Grow Generation stock is up more than 110%. In fact, I think it's even higher than that now, since I recommended it to the watch list in November. Now, the other stock is Turning Point Brands, trades on the stock exchange under TPB. It recently announced its quarterly earnings, where it reported a 31.2% increase in sales year over year. Its fourth quarter sales were $105.3 million. For the year, Turning Point sales were $405.1 million. That's an increase of $19.3 million year over year. Turning Point stock is up 77%. In fact, maybe a little higher now, since I recommended it to the watch list in October of 2020. And the rest of our list is moving up nicely. Planet 13 Holdings, which trades over the counter under PLNHF. This is a Nevada-based cannabis company that started construction on its massive new superstore in Orange County, California. It's going to match its big, well-producing store they have in Las Vegas. The 55,000 square foot facility in California is expected to be complete and open later this year, which is going to be a huge boom for this company. After being down as much as 11% early on, Planet 13 stock is now up 36%. Since it was placed on the watch list just last month. Scott's Miracle Grow Company. This stock has kind of bewildered me just a little bit. It had a blowout quarterly earnings report that it reported just a few weeks ago, and that has outpushed this traditional fertilizer producer up nearly 45% since I added it to the watch list in September. Remember, this stock went down as much as 11, 12, almost 15% after we recommended it. Now it's up 45%. Huge gain. Schweitzer Malted International trades on the stock exchange under SWM. It's a company that produces things like rolling papers that are used by tobacco and cannabis industries. They're going to release their quarterly earnings this week. I expect those earnings to be very, very good. Its stock has consistently grown in value and is up 48% since I recommended it to the watch list in September. The last one here is PerkinElmer Incorporated. This has also been kind of an up and down stock. It's been in positive territory the entire time since I recommended it, but it's kind of pared back a little bit. Now it's moving up slightly. It's a couple asset management groups recently sold off some parts of their stake in PerkinElmer. That pushed the price lower a little bit, but there are some other hedge funds that are actually buying more of PerkinElmer, pushing the price higher. It has rebounded since last week. It is up 24% since I put it on the watch list in September. So all told, the average gain of our watch list is now at 56.7%. That is huge, especially since we just started in September. So congratulations on your gains if you followed the watch list. If you did, again, I want to hear about it. I want to hear how you're doing. What did you invest in? You don't need to give me specifics. Just what did you invest in? What are your gains? What's your portfolio look like now? Email me feedback@moneymarkets.com, or you can leave a comment down below on our YouTube channel. Now, coming up this week, we're going to have much more on the Bull and the Bear podcast. I'm going to give you some buy recommendations. Adam, Charles, and I are going to give you 3 stocks to buy this week. That'll be coming up on the weekend. And then, of course, I'll have a podcast coming up on Wednesday. I'm going to give you a stock to buy as well. So stay tuned for that. We'll have our week ahead video that comes out on Sunday. We'll let you know what's coming up the following week on Wall Street so you can be better prepared for safe and profitable investing. Also, check out moneymarkets.com every single day for new content to provide safe and profitable investment information for you and your portfolio. Until next time, I'm Matt Clark, research analyst for Money Markets, your host of the Bull and the Bear podcast, marijuana market update, and the week ahead. Safe trading, everyone.